If you've been hearing clients say, I'm just going to rent for now, then this episode is for you because today we're unpacking the real truth about renting versus buying a home in today's wild real estate market and what agents and consumers alike need to understand before making a move. So, Michaela, take it away from there.
Yeah, welcome back to the Agent Shift. I'm Michaela. I've got my co host Jim here. And today we are diving into one of the biggest decisions clients face in today's market. Is it smarter to rent or buy right now? And we've got Stephanie Medlock here with Benchmark Mortgage. I'm super excited about this conversation. She's going to talk about how she helps clients and agents to navigate this whole conversation. Stephanie, did you want to introduce yourself?
Hey guys, I am Stephanie Medlock with Benchmark Mortgage. I am a local Charleston lender. I have been in the business for 23 years as of last month. So, done quite a bit of loans, helped a lot of people navigate this very challenging and sometimes scary and fun, crazy, wild experience with starting their, home wealth and equity and looking into buying versus renting. It's always been a super passionate subject of mine. So, excited to be here. I've only worked for two mortgage companies my whole life. I've been with Benchmark for 16 years. We just got back and our biggest year we did 350 million worth of closings. I have 20 employees that I manage and I'm also one of the number one highest producers in the United States. So hopefully I can have a little bit of experience to help share today.
And Stephanie, just to prove you're from the South, can you say the word y'all for us just so we can hear, we Northerners up here can hear how it's really said?
Yes, and I actually teach all of my Northerners a couple of Southern words before they leave, and I teach them that they have to keep the door open for people, and y'all need to be nice because you're moving away from the cold weather and you're moving to the friendliest city in the United States. So
Y'all need to be nice.
y'all are
Everybody from
excited.
Ohio is moving down there, just so you know. So you forget all of our people are coming down.
Everybody's coming. I'm starting to talk like a Yankee. I probably don't sound like it though.
You've still maintained it. You've got it.
Well, let's get into it. What's really happening in the marketplace? Let's get into it for people who are watching. So, Stephanie, what changes have you seen? Because we're talking about renters, right? There's a lot of renters out there. What changes have you seen in renter behavior like over the past years and what's leading up to right now, especially with rates and home prices with where they are?
Well, I think back in COVID years and when rates were super low, I always kind of use the analogy of my two teenage boys. We got up to first class for free one time and they were a little spoiled, right? Because it's like, wow, this is amazing. And then on the way home, they were stuck in the back. Me and my husband still had the first class tickets. There was a screaming baby. I was drinking my mimosa. And what's funny about that and why I joke about that is that's what happened during COVID. Everybody could buy at an extreme level what they couldn't ever afford. Let's say a $700,000 house when rates were 3%, is something that they got a little, I guess, spoiled to. And so at that time, a lot of renters were like, wow, I need to buy now. Right. And so there was this absolute frenzy. Since then, looking back, the last 3.5 years have been incredibly challenging, probably one of the worst years in my life for our careers because of the perfect scenario of it's kind of like everybody's got these low rates, so nobody wants to move. Okay. So we have a problem with inventory, which is kind of normalizing out, I think, now. But the interest rates and what the media puts out there about high rates, not a good time to buy. And it's terrified them to the point that they think renting is a fabulous idea. And look, and in some cases, it is. Renting is sometimes the absolute necessary and smart move. But there is not a long-term plan here. Okay. So what's happening right now is rents have gone up a lot. For example, I have a home in Mount Pleasant that my parents are about to move to. I paid it off years ago with a strategy I will show rent or people thinking about buying. And I've been able to do that with quite a few homes, paying them off. But that house in particular, my parents are going to live in for free since I own it free and clear. I could rent for $4,200 a month.
Stephanie,
Okay.
can you teach my kids to make sure they take care of me the way you're taking care of your parents when they get
I
older?
know. I'm a really good daughter. I keep telling my kids, like, man, y'all better make a lot of money and take care of me because I have been one heck of a good daughter. But yeah, so renters are just, I think they're I think the main thing right now that we have to focus on is helping them understand with complete clarity and take away the stress of what does these high interest rates mean? How does it impact? And what is your long-term goals? Because I don't know a lot of happy 80-year-old renters that never bought because they're still working part-time jobs. And this is something I see daily. And you cannot physically almost retire. Very few people in America, when they get to the age of retirement, will be able to retire if they have a rent payment or they have a mortgage payment.
Yeah,
Yep.
absolutely. And Jim and Stephanie, you guys have been in the business much longer than I have, and you've seen just the ebbs and flows and the interest rates change. And so I know a lot of the pushback I see, especially from first time home buyers, is that the interest rates are so high. And Stephanie, you're in Charleston, South Carolina. I am as well. Jim, you're in Ohio. So there's differences as far as what our rent and just our markets look like in general. But I know here in Charleston, our rent can be absolutely insane. And we talked about it a little bit in one of our last videos, Jim and I did, about the interest rates. When people say they're high, how do you approach that conversation, Stephanie? Because really, they've been higher. Of course, they've been lower. Like you said, people have been spoiled, especially those first time home buyers who saw it just a few years ago and they're like, oh, I missed the boat. But when people argue that they're really high, how do you kind of navigate that conversation?
Well, I have a graph that I'm happy to provide and attach, into this podcast where it actually shows that, honestly speaking, in the last, 50 years, the average rate has been in the mid sevens. And so the fact that a 6.25 rate is high doesn't make a lot of sense when the lowest rates we saw were really for only about a 3-year period. So really where we're at right now is some of the best rates in America. And to buy a house at 6.5, 6.25. Now, even at 7, yeah, that's getting a little high with affordability, but right now they're below where the average rate in America has been over the last 50 years. You have to show people with charts and show them that, hey, when my parents bought a house, the argument, of course, was, well, houses back then were $80,000, even though interest rates were 15%, right? And so I get that, but also people are making more money. The problem is people are spending more money and there's not a lot of education around budgeting and what's most important. And I see a lot of people not budgeting the correct way. I went through the Dave Ramsey program. I kind of have a love-hate relationship with him. I don't do everything he says and does, but I did it to help people because people are in more debt. I believe the statistic right now is for every $17 spent in America, $16 of it is on credit.
That's tough. You're absolutely right, Stephanie. When I bought my first house with a VA loan back in the 90s, I had an 8.5% rate, and I thought I hit the jackpot because my parents were double digits interest rates, right? I remember obviously when I was a kid, they were in the teens, but as I grew up as a teenager, I think their rate was 10.5% or something like that. So I thought I just killed it. I mean, I just thought I was stealing money at 8.5%, and now people are complaining, in the sixes, and they're looking at short-term vision versus you're like, perspective's everything. I love it.
And Jim, it's funny you say that because, and I'm just picking on this one or 100 clients that I have right now. And not all of them are like this, obviously, but it really is entertaining to see the mental thought of, people buying. For example, I have a client right now that is barely getting by, and one of them has a $900 car payment at a 9.5% interest rate. They also just bought their son a $100,000 vehicle that is also $1,200 a month. And then if you look at their credit card statements that I asked to provide with their interest rates, they're paying over 22 to 26%, I believe, in interest. And they want to worry about a rate at 6.25 on the biggest investment of their life. Because the last time I looked, when you buy a new car, it depreciates pretty quickly.
Right. And that was what I was about to jump into, a home where it's will hopefully be appreciating and building that equity versus all of the things that we spend money on that are depreciating immediately. They are not helping us in any way, really.
Like Starbucks. Think about that.
Yeah. Gary Vaynerchuk says this to the kids. He goes, hey, kids, stop buying stupid shit to impress people that you don't even like, right? A home is somewhere where you're going to live, in a place you're going to, build some equity, get some tax protection, and then move up. It's a starter house. We did an entire podcast on it. We'll link it down below about the starter house is just that. It's a starter house. You're not going to live there forever. It's not going to be your dream house, but you got to get in to have a chance to win the game. If you don't
Yep,
play, you're guaranteed to lose.
Yep, it's that stepping
absolutely.
stone. So, Stephanie, are there any hidden costs or downsides of renting that buyers tend to overlook that you just kind of forget about as a renter?
Well, I mean, I think what they realize is that, the price of anything in America doesn't stay the same. Okay. So rent will continue to go up. Just like your property taxes on buying a home will be assessed at a higher value eventually. Nothing's going to stay 100% the same. And so rent, I think they look at it as, oh, I'll sign this, lease for a year, paying $2,500 a month. And then guess what? Just like your home would appreciate at 4%, the rent's probably going to go up 3 to 4% per year. And a lot of times they don't look at that. They also have to pay renter's insurance. So they still have cost involved on renting. And one of the things I think a lot of renters don't realize is what Jim just said is you have to start somewhere. And sometimes the starter home might not be the home you want. But I have a 30-year-old young man right now he was 22 when he bought his first house with me. He's now on house number 5, and he started with a renter home, and he lived there for 2 years to avoid any capital gains. I taught
Yep.
him how to buy his next house. So again, he's on house number 5, and he has now got a net worth of about $1.3 million.
It's called move up for a reason, right? You stair step your way in. If you keep waiting, young people, if you keep waiting until you have the money and to buy the dream home, the house is going to price out way faster than you can ever save or earn to keep up. You got to get in the game and earn the appreciation to do it. So it's great, great play on that, Stephanie. So let's bust a couple myths. You want to bust some myths up, Stephanie? I don't even know if I said that right. Myths.
Yeah,
Let's do it.
so I think the myth is that, it's like you said, if you wait for anything in life really to be the right time, I don't think you're going to miss the boat on a lot of stuff because it's never going to be the perfect time. Life continuously is going to throw you um, a lot of challenges, right? Babies come, people pass away, you lose jobs. There's, everyone goes through this. Okay. But I think the myths are a lot of time people, when they call me, they absolutely think they cannot afford it because they don't know. A lot of people aren't numbers people, so they don't really know how to calculate what that monthly payment looks like. And they think they need 20% to put down. They don't
Right.
realize they can get a gift. I just had a client that literally, she was the sweetest thing. And she didn't speak very great English, might be the sweetest little girl I've ever met. We had 14 gift letters 14 gift letters from family members to help her buy her first home. And
Oh,
she didn't
That's
know that
an
was
awesome
possible.
story. That's
It is.
awesome.
And it was fun and challenging to do it, but there's so many creative ways to get people into a home. Like for example, a lot of times people don't realize there is 100% financing. There's not a ton of programs, but every once in a while, and I'll just say this because I'm a lender, I'm not a credit union. You can find a credit union that offers a pretty cool 100% no PMI program. And I'm the type of lender that if I can't help you and I know there's something that can get you into a home and help you build your wealth, I'm going to refer you to that person. Okay. I'd rather give that client a chance to be a homeowner if I don't have that program. You have FHA Sapphire, that's 100% financing. USDA, we don't have a lot in Charleston, but that's
We
100%
got a ton
financing.
in Ohio. Ohio
Yeah,
buyers,
yes.
USDA, right outside the city limits. You can have 100% financing.
Yeah. And VA loans, like Jim is a veteran. Thank you for your service. So VA loans, 100% financing. State housing offers down payment assistance. There's so many ways that you can get creative. And a lot of parents want to see because most of them owned a home and built their wealth that way. They want to see their children exceed. I am going to actually buy my son a property next year, South Carolina. He's going to school there. Super smart because the rent there is so expensive. I can go buy him a home in Columbia for $350,000, 2-bedroom, rent out the other one to his roommate. And literally, it's going to be cheaper than what I could pay rent. And then I'm going to keep that property for my other son to go there. And my intent is honestly to pay it off by the time both of them graduate from South Carolina, which will be in about 8 years from now. So
Definitely, my
there's a lot
kids
of
and
myths.
relatives are going to want you to adopt them now. They're going to say, "Can we trade up parents to get Stephanie as a parent?"
Well, here's the way I was raised, and I don't mind being transparent about this. My parents filed bankruptcy twice when I was a child. And my dad made a lot of money, but we moved a lot, never enough to really gain a lot of equity. And we rented a lot, which was also, I think, why I'm so passionate about it, because I saw the money that was wasted. And now they're living off Social Security, and it's a struggle. And I don't want that for people. And so I think that's why I'm so passionate about, like, my son both of my children have credit scores. One of them is 14, one of them is 18. I started early and I have taught them about financial ownership, responsibility. And that is something that finally they're talking about in schools that I think super important to learn at a very young age. And I think parents are willing to help their kids invest in their first house because they want them to succeed
Right.
and be helped and be wealthy one day. And let's face it, I do loans for a living, and the majority of my clients have very little in savings. Okay. And so, how do we retire? Okay. Because I don't know about you guys. I love what I do, but I don't want to work till I'm 80. So,
Right.
if you have just savings, a lot of times people don't have pensions in this age we're in, right? In this time of America. So, if you don't have a pension and a lot of people are borrowing money from their 401k and depleting it to get by. So, what do we have left to retire on? Real estate, wealth, equity, investing in multiple properties. Right now I own 10 properties.
Everybody who's coming out of college right now is going, "What's a pension?" They're also saying, "What's a job? What is that? Can I get one of those first to start?" But a pension, that goes back a ways. You're right. Nobody has those anymore. You're right, Stephanie. It's true on that. Kayla, let's go to the financial breakdown. Talk about rent versus buying by the numbers, because people are probably like, "Okay, I get the idea," but let's get into the numbers on it. What do you say?
Yeah, and I just wanted to kind of throw in too, if you're a buyer or seller listening, or if you're an agent, you don't have to be an expert on all of these things. I know
Right.
Stephanie just listed off so many different programs, and if you're an agent, your head might be spinning and you're like, how do I advise my client? That is the importance of having a trusted partner, a trusted lender to point them to, because we should stay in our lanes. That is what Stephanie is for me. She is the person I know I can point my clients to and say, she will figure it out for you. She is a wealth of knowledge, but don't feel like you have to know the ins and outs. It's a really good idea to understand all of these programs and how they work and have a general knowledge. I called Stephanie the other day because I was like, hey, explain this program to me. It was something I wasn't really familiar with. What do I need to know about it before I go meet with this client? What conversations, and I know Stephanie does an amazing job doing a video, a Zoom call with clients before they even jump into the whole process so they know what's available. But find that lender if you don't have one already. That is what they do every single day. So you don't need to know every single detail of these programs.
And just like Michaela, to your point, and just like there's good realtors and realtors that are not so good, there's also great lenders like Stephanie and some that are not so great. And that's why I think it's important to get partnered up with a great realtor first, because great realtors work with great lenders and they can help guide you. And here's one thing I would tell you, young people that are out there, kids, don't just go online and fill out some application with some company that has a spaceship as a logo that's going off. And it tells you that you're pre-approved. Because I can promise you this, you missed out on a ton of programs, just like we heard Stephanie listing off. Here in Ohio, there's a program called the Ohio Housing Finance Agency where they will grant you your down payment. As long as you stay in the house 5 years, they forgive the grant that they gave you and you never have to pay it back. It's instant equity. So the huge portion of your down payment that's coming to you, but you're not going to find out about that by going on to Google or whatever your favorite thing is and filling out some online app and thinking that's it. You need to have a human being like Stephanie who can listen to what you're trying to accomplish, find out where you've been, where you're going, and pair you up with the right program. So that's great. Great point on that, Michaela. I'm glad
And
you
just
brought that
a
up.
personal story, before I was in real estate, when I was buying my first home, I had filled out some applications from all over. I had talked to other lenders, and at some point I had narrowed it down to two lenders, but I was getting much different rates. And I was like, where is the discrepancy here? Like, it's the same kind of program. What's happening? And one of the lenders was like, well, send it over to me. Let me look at it. And the person, the other program or the company on the other side, they were out of state. I mean, they worked in South Carolina, but that particular person wasn't in the Charleston market. And so there was a huge difference in what they were telling me my payments would be. And so to me, that was just the first time I realized that working with somebody local who understands that local market is so important. And that other lender stepped in and kind of explained it to me. And I was like, it makes so much sense. They were like, they were giving you kind of ballpark figures of what maybe your payments would be. So, shameless plug there too. Work with somebody local. If you don't know somebody, your agent should be able to plug you in. If you're an agent and you don't have a local lender, you need to have a local lender.
And if you work with someone like Michaela or Stephanie also, they're not just looking at you as a single transaction. This is a lifetime relationship they're going to build. So if it's better for you to rent, they'll tell you, hey, you should rent right now. And then we should regroup in a year, 18 months or whatever. And they'll give you a game plan to get to a point where you should, where you can and also should be buying. And they'll let you know that they're not just going to stick you in something and set you up to fail, because that's not going to create a lifetime client. They're going to put you in the best position for success. So I love it. Great stuff
And
on that.
Michaela, real quick, back to your point, I think that's so smart because, I try to stay in my lane. I know enough about real estate that I think I could be a real estate agent. And you've learned so much about loans and stuff. I mean,
Stephanie, real
yeah,
quick, if you want to get your license, I know an incredible brokerage that is looking for great agents.
my advice to anybody is I know online can be a very valuable source, okay? But like go to Mortgage News Daily, for example. It is not owned by a lender. It's probably one of the most transparent, honest, because I will give you a fun thing to do. Go and Google after this conversation and try to put in what is a 30-year fixed rate conventional mortgage today. You're going to get about 100 different interest rates
Right.
because first of all, there are something called loan level price adjustments where if you have a 620 score versus a 800 credit score, your rate is extremely different because they're worried you're more of a risk. So we work with clients to get their credit scores up so we can obtain a better interest rate. But there's like 25 different factors that could impact someone's credit score. And honestly, too, look at the very, very tiny print on some of these websites. And I'm not going to pick on anybody in particular, but in the websites, you will see, by the way, this low rate that you see here is with 2 points,
Yeah.
which if you're borrowing 400,000 is $8,000. Okay. Which
Gosh.
we're going into a lower interest rate environment, which makes no sense at all in this environment. That money's going to be gone where you could use a buy down or something instead. But there's so much hidden in that rate that is why you have to talk to a trusted lender and try to stay offline because you're going to get super confused. There's a lot of cost associated with a lot of rates you see online. And in the very asterisks, it'll say this is also someone with an 800 credit score. So how can you look to know if you have a 650 score and you're buying a condo, it's going to be different than someone that has an 800 credit score buying a single family home. And so that's why it is so confusing. I get why people continue to rent because there's a lot of misguided and incorrect information out there that people just don't understand. And that's what our jobs are, is to help you guys really understand the difference and what your interest rates actually could look like.
And Stephanie, some of these online people will also talk you into doing a soft pull on your credit or a hard pull, and then they'll shotgun blast you everywhere, and you end up with like 20 credit pulls from all these different lenders as they're out there shopping your application. That's why it's good to work with a local person who can run all the different programs for you and let you know which one is tailor made best for you, right? So would you rather go and buy a suit or a dress off the rack, or would you rather have somebody custom make one for you? That's the difference between just one of these online sweatshop type lenders that are out there that are really great at marketing, right? They market all the sports shows and things like that, and they get you to fill out a quick app, get a quick approval, but they're not customizing anything for you. And you could be, especially first timers, you could be missing out on the chance of a lifetime. There are so many programs to help first timers. You got to have a seasoned professional like Stephanie to run that for you and match you up to the programs that are there in your locale that work for your situation. There you go.
Absolutely. And Jim, I think that's actually a really good analogy, like that custom um fit dress versus just something off the rack, because that is how it feels whenever, and you can kind of see it for yourself if you do look at an application on one of these big sites and then you talk with somebody like Stephanie or a local lender. The amount of care and attention to detail is night and day, and then the programs that they're able to come up with for you. Something I wanted to touch on, because I do sometimes see hesitancy, is the credit pool. Stephanie, can you kind of talk about the overall steps and like things that you look for whenever you are talking to somebody about the pre-approval process, what information you ask for? But I do have a lot of people say, oh, I don't want to do a credit pool. Stephanie, can you kind of talk about what that process looks like?
Yeah, so and that is something that I do think stops people a lot, and a couple of things too is like I always kind of joke around like getting a mortgage is kind of like pulling your dress up. It's terrifying. It's we see your bank statements, we see your money spending, like we see how much money you make. And that's why I kind of understand when people that know me really well might not want me to do their loan, and that's okay because it is a private matter and people are worried. And sometimes people know their credit score's lower and they might have had a couple of hiccups. But, here's the thing about credit. Credit, everybody almost monitors their credit these days. Okay. So there's something called the FICO score, which is what banks use. And there's also something that's called the Vantage score, which is normally what you're going to see if you utilize like Credit Karma and things of that nature. And the difference between the two is that the FICO score has an algorithm in it that banks like because it goes into more depth. They're more expensive to produce that score because it goes more in depth about that person's credit, their lates, etc. So, for example, if you're monitoring your score, which I highly suggest, there's a lot of fraudulent activity going on. I recently had to put a freeze on my credit. You need to monitor it, but know that if your Credit Karma score says it is 650. When I pull it with my model, and every bank uses the FICO, it's probably going to be about 30 points lower. So people get a little frustrated with that. But the reason why I want to tell you that is because also when you get your credit pulled, people don't realize, shopping is a thing that almost everybody does for interest rates these days. And, it's kind of I have a love-hate relationship with it because, I find true value in providing the best, most competitive rates at the most highest level of financial advice that I can give someone for a lifelong period. I'm doing clients' kids' loans now. They trust me and they know I will guide them. And that is worth money to me. So if you're not willing to pay an eighth better rate to have the absolute best person doing your loan, then I think that's a little ludicrous because cheaper is not always better, but I'm always going to be competitive. But the credit score, what happens is people shop, okay? You're allowed to shop as many lenders as you physically want to in a window. They say it's up to 30. I don't trust that number. So I always tell people if you want to shop, do it now, do it within the first 15 days. They want the consumer. If they don't like the first lender's rates, they don't want to penalize them for having multiple credit pulls. The credit score is probably going to drop about 7 to 15 points within a 30-day period after we pull it. So if you have an 800 credit score and you're worried about a credit pull, you don't need to be worried about that. Because as long as you have a 760 or higher, you're going to get the best rate. Now, if you have a 620 credit score and we pull rate, yes. So a lot of the times what we do is, right now it's about $100 per person for us to pull a credit report. And I can't charge that to the client unless we close the loan. So we have started doing something recently called soft inquiries. The reason we do that is because it helps us promote to the client that I know you're nervous about getting your credit pulled. So we're going to do a soft inquiry. It's kind of like when your credit card company might check to see how you're doing on your credit if you've made a couple of late payments. It doesn't impact your credit score. It's like it doesn't even happen, and we don't charge you for that. Okay. And so that allows us to get the exact same score that we would get with a hard inquiry, but it does not count as a hard score. The problem is we can't obviously use that to get loan approval, but we can use it to get automated pre-approval as long as it's not an FHA or government type, VA deal. But, at the end of the day, it is a necessary and people need to start. And if they are scared about getting credit, I strongly suggest the soft inquiry. I use it about 90% of the time with every person I speak to just to make them feel better about starting the process. And also to sure that, credit is so important. If you're thinking about buying in the next 2 to 3 years, I highly advise you to start now because I have a roadmap, a credit simulator that says literally what can this client do to improve their score to a 700, and it prints out a homework for you that says, hey, this credit card down from $3,000 to sometimes just $300 less. It's all about account utilization, right? So people need to start early and monitor their credit and really, you have to start somewhere. And I know it's a scary process, but the credit portion is so important right now that we can guide you. Like, for example, and I will do this really quickly because we're getting off a little off subject here, but funny story. The other day, we salvaged, me and my team, a deal from New Jersey. A lender that is very, very large turned a client down that was a family friend of my production partners 3 times. He lost his job. We literally had to call the client and say, okay, what's happened? Give us your information. Let's make a go of this. Well, when we restructured the deal, it was fine without the job. And on top of it, the lender never put the girlfriend on the loan. And we could have taken him off because he didn't have a job, and he could have gifted his girlfriend or fiance the down payment. And because this man structured the deal wrong for them in the beginning, they ended up paying a 0.5% higher interest rate because they worked with a lender that didn't understand their job. And after we figured it out and sent the email, the guy doubled down and turned it down 4 times and said, no, it still doesn't work. We had to hop on a conference call with this gentleman and say, exclude this car payment because if he makes another payment, it'll be under 10 months. Add this. He can pull out an annuity tomorrow, call his financial advisor, set up $400 a month here, like pay off these 2 really small debts. He's good to go. And that is the difference about why interest rates are important, because if you work with the wrong lender, that person now is paying a 0.5% higher rate because they chose the wrong lender.
I always tell first-time home buyers this: look, don't let a 3-digit number think it defines who you are. It has nothing to do. Everybody start off, most people when they're getting started, the number is going to be low. You had a collection in college or something like that. And probably exactly what Stephanie said, you've got your ratios out of whack on your revolving debt. Sometimes, I know Stephanie just talked about, she can do that. We can just reproportion that, move that around, and your score will jump up 30, 50 points. You're good to go. And it's not if you can buy, sometimes it's when you can buy. And I love that printout thing you have, Stephanie, a little homework, actually pun intended, homework, right, for you to go do so that you can get a home. So it's not if, it's when, but we have to have a starting point and we have to have a game plan so we know what to do for you, because I don't think they teach it enough in school, Stephanie. I think you said they're starting to teach it. It should be an entire 2 years courses on how to run your finances, how to properly invest. Anyways, we won't get off on that subject. That's another podcast
We
for
need to
another
do a
day.
whole other podcast on that.
We'll do a whole new podcast on that one. We'll get into that one. We'll probably get kicked off social media if we do that one.
Well, I think we've kind of touched on it a little bit, but it's a 2-part question. What are some of the wealth building opportunities that the renters are missing out when they are staying on the sidelines? And then you've kind of alluded to it a little bit, Stephanie, but some of the situations where renting does actually make more sense.
Yeah. So I'm happy to share this too with you, but I was telling a client this the other day is, I have this cool thing, a tool that I use that shows rent versus buying. Right. And look, here's the thing. It's not always the right time. And that is okay. I told a client, they seem so stressed about buying a house with so much they've got going on in their life. I said, you know what? It's not great time for you right now. And that's okay. But guess what? Renting, you get the argument of, well, buying a house has more expenses. You have repairs, you have to, it's more of a payment. And normally it is by the time you add in principal and interest, slightly higher interest rates right now, taxes, insurance, all that fun stuff. But at the end of the day, almost every single time that I run this analysis for people, let's just use, if you're renting right now for $2,000 a month, okay, I'm just using that as a simple number. In 12 months, that's $24,000 that you took, you threw it out the window, it's gone, you'll never see it again. Normally, when I run these numbers, let's say that person buys a house, and I think the example I used was $500,000 with 20% down, which a lot of first-time home buyers aren't going to have that. But let's just use that as an example. So you finance $400,000, with taxes and insurance and PMI, I ran the numbers, it's around $3,000 a month. Okay. So jumping from 2 to 3 is a big deal. But if you look at the first year in that example, if you bought a $500,000 home and you financed 400,000, and let's just use an interest rate of 6.25, then if you've earned, let's say, 5%, or let's just say 4% in equity, okay? Then basically, like the numbers I ran, if you bought a house for 500,000, even though your payment's going up, and basically at 4% a year, you're going to make about $20,000 just in equity. 4% is a pretty conservative number. Nationwide, I know that super varies, but Charleston overall, I'd say that's pretty standard, except for those weird years where we had like 15% appreciation. So 4% I think is being pretty fair. So you've gained 20,000 the first year, and then you've paid down about 6,000 in principal and interest, which I think that's where a lot of times people don't quite understand is, yes, the first 5 years you buy a house, you kind of get that mortgage statement at the end of the year and you're like, I've been paying, $3,000 a month, and I've only put $6,000 towards principal because you're paying so much interest. But guess what that interest is? It's a tax write-off. And that's where renters are not getting that part, is most people don't understand some, if you itemize and your tax implications, and you don't really understand that if you look at it from a perspective of it's a tax write-off, if you can spend 24,000 in rent out the window, you can buy a house, gain 26,000 a year. Every time I run a scenario for a client, it almost is equal. You either lose 24,000 or gain 26,000, at least equal normally. And so,
That's
I think that's where, people need to really see the numbers, which is what I'm really good at, is making them understand visually and saying, if you do this in 5 years in rent, which goes by so fast, guys, I will be 50 in like 3 months, and years start to go by fast, and you will not mean to rent for as long as you do, but you get stuck in that situation, and life gets hectic. The babies come, you don't have time to move, etc. But if you live in a house and rent for 5 years, you're going to waste $125,000. I don't know too many people right now that have $125,000 in their bank account. Or you could buy a home and gain $125,000.
And Stephanie,
Which
let's not
one? Which
forget that
one do you want?
most of these kids have a roommate anyways when they're renting, right? When they're renting
Yep.
a place, why not you buy the place? And then I know it's not ideal, but rent a room or two to your people. I challenge any buyer out there. If you're a single buyer and you're buying the house, you show me a 3-bedroom house and I'll show you the payment on it. And you rent out 2 of those rooms for, here in Ohio, $650 a room, which you're going to pay for way more than that in rent. But that's a really cheap rent price. And then, guys, you have to price in a maid into there, right? They're not a housekeeper. You have to price in a housekeeper into the rent price, right? So that's done. So the place doesn't smell like dudes, but you rent it out. And now, guess all that equity goes to you, and your payment goes down, and you split the utilities and the cable bill and the internet bill and everything 3 ways. You're living for way less than you would be if you were renting. And just like Stephanie said, you get to keep all the tax write-offs, you get to keep the equity, and now you are the landlord and paying it. And then when you find that special someone or something like that, now you have 2 incomes coming in, and you kick the roommates out. That's how I did it.
You take that and say, let's say a lot of my people do this. They buy that first house, they get a renter, just like Jim said, right? So let's say you rent out 2 rooms for $700 a piece. That's $1,400. Your payment just went to 3. You were paying 2. So let's just say you buy the house for 3 and now you got $1,400 a month. That means you're now paying $1,600. You live
Right.
there 2 years, deal with the stinky roommates. Then you take money out of the house and do a home equity line, buy another primary, let them continue to make the payment, replace the 3rd bedroom with another renter, increase their rent like every other person's going to do as a landlord, because it will happen yearly. And then now you've got buckets of real estate, and that's where you build wealth, is you start here and then you build here and then you start here. And two, like what was so terrifying about listening that the first time home buyer right now is jumped to 38 years old is terrifying to me. It is terrifying to me because people are, living with a roommate's not ideal. Okay. It's not for everybody. And I get that. But you know what? Being 38 years old and never owning a home is super not ideal, because I bought my first home at 26 years old. I bought it at a great time. I made $500,000 in 2 years. That was one of those weird years in like 2004. I took that money. I bought $1.5 million house, put down 800,000. That house went up another 600,000. Took that house, bought another house, and that is how you create wealth. But you got to start, like Jim said, with that very first house. And then if you work with a lender like me, I can teach you and guide you and show you exactly how to pay off your house faster using rents. A lot of times people will just continue, like when they refinance, for example, I can't tell you how many times when I talk to those clients that were perfectly fine making their rates at 6% and they refinanced to 3. I said, you know, what'd be really cool is if you took the $1,000 a month you're about to save because your rate's dropping in half and you apply that each month towards principal. I've had 20 clients call me and tell me that they've paid their house off from my advice
Yeah.
because they
Well,
continue to make the same payment.
and I think people who are listening should just be understanding it makes you want to make a lender your best friend, because a conversation with Stephanie could literally lay out like 8 years of your life, just a step by step plan. Really, if you're like, I know I can't afford to buy a house right now, still have that conversation. Like Stephanie said, if you're thinking I want to buy in 3 years, let's have that conversation now. Let's give the homework and the step by step guide on how to get your finances in order, your credit where it needs to be, get a projection of what maybe the house is that you can afford. And then from there, build out that plan. Are we going to bring in a renter? I mean, you just gave us a blueprint for years, that step by step. How do we get to the house? And then what do we do when we get the house? And then what do we do after we're ready for the next house? I mean, a lender can offer so much value to to not even the first time home buyer, just a buyer in general. And it's so important to have those conversations. And I just feel like there's a lot of hesitancy when I say, okay, let's connect you with the lender, that there's kind of like this wall that people are like, oh, I don't want to do that. That seems like a big commitment.
Well, and Michaela, that goes to my point too. Like, I think we need to stop saying, call this lender first and get pre approved, because that's terrifying.
Yeah.
Stop using the word pre approved. Say, why don't you have a discovery call with Stephanie to see first if what this home buying process looks like? Is it right for you? Is it something you even want to do? And just pick her brain for 10 to 15 minutes and just have a quick conversation about what this could look like versus, hey, before I talk to you, you got to go get pre approved. That's a credit check. That's income docs. That's W 2s. I just started my job. They're terrified. And guess what? They stop cold in their tracks.
Yeah.
So people need to just start with a simple conversation. We don't have to say, all right, you got to go do all this stuff now. I'm telling you, 90% of people aren't going to call me in that scenario. So if we can get them off of pre-approval credit checks, like let's just have a conversation about if it's a good time. Because honestly, I'll be honest. I talk probably 25% of people out of buying a house. And my husband always jokes with me. We run our business. He goes, baby, we're not in a non-for-profit here, honey. I'm like, but it's like I truly want people to buy when they're ready. And sometimes it's not great timing, but you can buy a house with someone. So let's say you want to do the whole roommate thing, but you can't do it on your own. Buy the house. I have mixed emotions about people buying a home before they're married, but it works out sometimes, and if it doesn't, it doesn't. You split the equity and you move part ways, right? It's better than renting. You can buy a house with a roommate. You can buy a house with a brother. You can buy a house with 3 people. You can buy a house with 4 people. You can buy a house with your parents being a non-occupant co-bar. Awesome idea. I do that all the time. Matter of fact, when I
Stephanie,
buy my
I had to buy the house with Stacy before we were married because it took me 4 years of begging to finally get her to say yes. So being under the same roof made so I could just beg each day, longer periods, right? Because I was in front of her each day. So 4 years of that. So that's how it worked out with us. I love what you're saying though, because sometimes though there are cases where people should rent. And so let's just say a couple of those, right? Because during the buyer, I like to call it a strategy session or the game plan with the lender versus, pre-approval is just a terrifying word. It's a stop sign you're putting up
yeah,
basically for people. It
it's like
gives them a chance,
flashing
right?
lights.
So
Like, oh God, this is
yeah,
making me nervous. I'm
hey, let's
backing
just get you
off.
the lender. You guys can do a strategy session or get a game plan together as to what's happening. It just sounds less threatening when we do that. But sometimes you're right. There are times when they should rent. What are some of those times?
Like, I look at it, and this also goes back to, affordability. You really need to, I always tell people, you know, if you don't have enough money to, if you lose your job, you know, what is your backup plan? Where are we going to pay the mortgage payment? Do you have any reserves? Because it's super important. If you're buying a house and you have $10 left, and this, I have done this before, where you have $10 left in your account. I mean, that's a scary, very anxious ridden situation to be in. And I don't advise that. I'm not in this to just make money for people. If it does not make sense, sometimes people are spending out of control. So that needs to change. Debts need to go away. Sometimes it's just, hey, you really need to work on, paying your car off. You can't afford a payment and a $700 car payment. There's strategies around that, but also, for clients that are not ready, we don't just say, hey, sorry, your credit score sucks and just, go on your little way. We write out a game plan for them. And hey, today's not the day and you're not ready for whatever these reasons are, but let me provide you a game roadmap of how to get you to a house. I worked with one client that has 6 children for 3.5 years to get them into homeownership. This man still sends me a Christmas gift every year.
That's
So
awesome.
thankful. So you may not be ready, and there's multiple reasons of why. It might be just, the spending is not where it needs to be. And sometimes people need to learn that to make money, you have to, give up some things. Sometimes people are taking, $10,000 trips when they should be taking a $2,000 trip to Myrtle Beach. I'm sorry, but you can't afford to go to St. Thomas and buy a house in the same year. And the priorities need to shift. We try to work with them long term to figure out that plan. And also another thing I think super smart is just try it out. Like, call us up, or you can run the numbers online. I don't suggest doing that. But if you're paying $2,000 a month in rent now and your mortgage is going to go to $3,000, here's what I suggest. If you don't think you can do it, then take $1,000 a month out of each month out of your paychecks. Okay. And I want you to put it in a savings account. That does 2 things. Did you have anything left at the end of the month? And if you didn't, why? Let's analyze that. And if you did, how did it feel? And if it was non-negotiable and you can't make that happen, let's lower that now to $700 a month. Where can you make it work? And what can you cut out of your budget? Because to me, there is sacrifice in making money. Like, people always look at me and my husband like, oh, you're so successful. You have a Freeman boat, you have multiple houses, but there's a price to pay to get to success and wealth. And you have to make good decisions starting early. And that's what's so terrifying about people waiting to be 38 years old to buy their first home. Because if I wouldn't have started at 26 years old, I would not be financially be able to retire in 5 years like I'm going to be able to. So I will be able to retire at the age of 55.
And guys at 30, you may not be able to be out at the club popping bottles on the weekend and having $1,000 a month car payment when you make 60 grand a year. You may have to downsize a little bit and stuff like
It
that.
is funny. It is a funny thing to see, right? It's almost
Oh,
like we just live in a world where, like, do y'all feel like sometimes, like, even Amazon is like free? It's like so easy. And it's like, oh, it's like Amazon, like, it'll be here tomorrow. And it's like you just keep clicking and buying and buying and buying. And then all of a sudden I'm like, wow, I spent like $1,400 at Amazon this month.
Yeah.
But people live a little bit beyond their means, and I think that needs to be addressed in the United States. And that's what I teach my kids is, if you want to be wealthy and you want to retire and you want to invest money, you can't buy $100,000 car. And every kid that's graduating from college thinks they're going to leave making 100,000. Guys, that you won't.
Yeah.
You
Well,
will not.
and I think it's a good time to understand we are asking people to do something that is really uncomfortable. And it's our job to make it as comfortable as possible. Stephanie kind of have already talked about just the care and attention you put into it, but good ways. We talked to a lot of agents. This podcast is really directed towards agents and ways that agents can make this conversation or this transition a little bit easier. We've seen a lot of shift in the industry, and just even getting buyer agency agreements signed up front, that can be a really stressful experience for buyers. They're like, I'm already signing a contract and can't even get my foot through the door. What am I signing? And then sending them over for this pre-approval process. But Stephanie, what is a way that you would like for agents, or a message that you would like agents to be giving to their buyers, or how do you think we can make that transition, handing them over to you a little bit easier? How should we be having these conversations?
Well, I think it's kind of like Jim said originally. This is a team effort, okay? You can't do your job without a great lender, and I can't do my job without a great real estate agent. And I think where they need to understand is that you have provided a team of people that you trust, that are honest, and if they go outside of that, you lose control. If there is an issue, people don't realize the cost of using the wrong people and how important that decision is in the lower interest rate. And sometimes that's all people care about. And
Yeah.
that's okay. But guess what? I'm not your person. And you know what? I told a guy the other day, I'm like, if you just want the lowest, cheapest rate and you don't care about quality of service or missing your closing, that's fine. Like that's what you should do. But I think real estate agents need to understand that, I get that it's like kind of like, oh, well, I have to give out so many names and I feel like I don't want to be pushy. But if you care about your client having the best financial advisor, I am not just a loan officer. I don't just send a pre-approval. I have home buyer consultations going over options, different rate options, different loan programs. What is the best strategy? What's your long-term goal? Are you buying another car? What are you going to do when this car's lease comes up? Are you having children? What does your 5-year term plan look like versus, hey, guess what? You're pre-approved. Like, no, like, and just because a lender tells you can go buy a $600,000 house, is that the smartest move? Probably not. Maybe the conversation is, I'm a little concerned about your debt to income ratios being above 43% because you're going to need another car and this is going to hurt to have this housing payment. So we need to strategize about that. What are we going to do? And that is going to put your client in the best scenario. And also, too, I mean, for every client I close, I typically get at least 3 referrals. So if an agent works with us, they will trust in the fact that that client's going to have such a great experience with us as a team that they will not go
Mhm.
anywhere else when they look to buy their next house. And
Yeah.
that is so important because I just taught a class. 91% of agents do not follow up after closing, which is absolutely a statistic from NAR from 2024. And that amazes me because when you work with me, they will remember us, right? And so I think it's important that this is not a one and done transaction. This is a lifelong commitment to someone that cares about your financial stability and real estate wealth, and that we're always going to give you the best advice. So I think real estate agents really need to just be scary enough to have enough information, but to guide them to us. And yes, let's say you have a client that says, I already have a lender, I've already been pre-approved. Okay. The conversation should be, I tell you what, I respect that. I think that's amazing, but you're not from Charleston. A lot of people are relocating here. They're not local. And I would really appreciate, and I think it would do you, I would be doing you a non-justice. Like it would not be fair to not at least have a conversation with Stephanie, even if you don't use her for the loan, because I know she's going to give you the best advice and maybe in a lens in a way that this other lender didn't view it. And I just want to make sure you're getting the absolute best advice. And I would be not doing my job if I didn't at least tell you to have a conversation with it.
And I think the great thing about this custom idea that we're talking about having the right real estate agent who's paired with the right lender is that we don't make you house poor. We've been talking about first-time home buyers a lot on here, but just because you qualify for the loan doesn't mean you're going to be comfortable with it. I mean, you still probably want to have date nights and things like that. And like Stephanie said, hey, you're going to need a car in 2 years, right? We need to budget that in, looking 2 years out versus setting you up for failure. Where all of us that are on here are looking for long-term relationships with the people we're at. So we want to set you up for success, especially our first timers, right? To build you the stepping stone to move up in so you can get to that dream home faster, the home that you're going to stay in, that you're going to ride out on there from that. So quick question for you here, Stephanie, since we're talking about real estate agents. Real estate agents are all looking for more leads. What would be a good social media post that agents could put out today on their social media, that they could create a video or a reel or something like that they could create, that they could put out that could help with first-time homebuyers? Like, what's something they could put out today? Because it is an epidemic of the average first-time homebuyer age went from 27 just a few years ago to 38. It's an entire decade of wealth lost for people. What's something we could put out there agents could use today and they could make that?
Well, first of all, you're going to have to use your friend ChatGPT, obviously, right? And secondly, I think the education of them being able to communicate that, I think right now people are just so miscommunicated with media, and it's a bad time to buy. It's a bad time to buy. It's a bad time to buy. You know what? The smartest people, they buy real estate when other people are living in fear. Because those people right now that are buying, I'm telling you what's going to happen. If I was a real estate agent right now, I would be preaching this every single day, is that, let me just give you this quick example. If you wait to buy, I just read a report the other day that I think it's 78% of people that want to buy a home are waiting to buy until rates get in the fives, okay, and stay in the fives. And some of them are in the fives right now. So when that happens, I was never the smartest with my economics class in college. I hated it, but it's supply and demand is a pretty easy number, right? What happened to toilet paper during COVID? What happened to cost during COVID? Everything went up. Inflation went out of control. And so the same thing's going to happen with home prices. So right now we're in a market where people have a chance to buy the house now. And I'm not going to say, marry the house, date the rate. I kind of don't love that at all. But here's the deal. Why wouldn't you buy a house right now at 500,000? That same house, if we use 4%, is going to be worth 520 next year. Okay. You're going to buy right now at 6.25. And then if the person that waits next year is going to buy a house at 520 at 5.25, let's do the math here. What's my client going to do that's going under contract today at 6.25, buying the house at 500? Now they're going to refinance in 12 months at 5.25. They've saved 20,000, and now they got the same rate as the person that waited. So why does it make sense? Why is there this mentality and misunderstanding about why people are waiting to buy? Because guess what's going to happen? Rates drop to the low again. Buyer demand shoots up. And we all know buyer demand increases greatly under 6% interest rates. So all that's going to happen, you're going to buy a house for more money. Who cares about the rate? Why is everybody so fixated on this interest rate? I don't understand it. It is all about refinancing. I mean, you can refinance at any time. And that's all you're going to do. Like I'm telling everybody, this is maybe a 12-month thing for you. And people don't trust that rates are going to go down. And I get that. Anything could happen. We don't have we don't know what the future holds, but I do know this. The Fed is going to have to do something, and we're awfully close to where we're starting to worry about the jobs. We're starting to worry about unemployment. We're starting to see big shifts in the market. Inflation's starting to hit close to 2, and interest rates are going to drop. And so you're going to refinance. And so, if I was a real estate agent, I would be showing them in real time numbers like, hey, you can buy now at this payment and then refinance and have this payment. Like I'm even starting to add in, this is what it looks like now. And then I do a rate redo. I don't even call it a refinance, a rate redo. What does a rate redo look like? So let's just assume interest rates drop 0.75%. This is what your payment's going to look like 12 months from now. So don't buy the $450,000 house based on a 6.25 rate. Buy the house you really want. Because guess what? If you don't buy the house you really want now, all that's going to happen is do you know how expensive it is to move? I've moved 42 times, just for the record, 2 times. I think I have a record. And it's expensive to move, right? So buy the house you want now. And if you understand the market like I do, and if you look at real-time numbers and what's going on in our economy, these interest rates, we're already beefing up and hiring up for the years of 26 and 27.
Absolutely.
I believe the reason people are so focused on the rates is the media. You have the national media that's talking about this national broad thing, but we understand that real estate is hyper-local. And when I say hyper-local, it's your first time hearing us talk about this. Michaela and I talk about it all the time. Real estate is not a national thing. It's not a state thing. It's not a city thing. It's not even a subdivision or community thing. It's street by street. It varies. Thing custom is customized in there. And that's why you have to work with a local professional. Look, if you're a first-time home buyer or somebody just getting into it, you have to have a buyer's agent, somebody who's on your side, who has all the pieces lined up, the 17 different moving parts, lender being one big chunk of it. They have those alignments, they have those relationships set up for you to make sure you're in the best position for success. And I see a lot of young people right now thinking that they're just going to bypass having a buyer's agent. It's a really bad move for you in what will probably be the biggest financial transaction you'll ever make in your life. And the most important one is the first one to stair step you on to success. So I love everything that Stephanie and Michaela have said. Michaela, what do you say we go to our lightning round, what we do with our podcast guests, where we rapid fire a couple questions at them and they can give like one sentence, 30-second answers. What do you say?
Love it. Yep. Let's go ahead and jump right into that. Jim, did you want to kick it off or?
Yeah, sure. So, all right. So, Stephanie, these are to you. We're going to nail you with them right out of the gate. And you just, first thing that pops in your head, you're going to say, and this is how we're going to wrap up with that. So,
This should be fun.
this will be good, right? We can always edit it out if it's bad, the magic of AI or whatever. No, if there's a blooper, it's going in for sure. Just so you know, this is how she's like, I'm never doing a podcast again. All right. So here we go. So how about this? What's one reason buying could actually make sense right now? First thing that pops in your head.
Because interest rates are going to drop and you're going to get a better deal on a house.
All right. And one mistake renters make that costs them big over time.
They do it for way too many years.
Yes.
Yeah.
They think it's going to be a year and it turns out to be 7.
Yep. What's one quick myth to bust? The biggest myth there is out there.
You got to have 20% down and a 700 credit score to buy a house. You can do
Right.
580 and 0% down.
What's the lowest credit score you've ever done, Stephanie? Don't say the name of the person, because as we know,
Well,
people
back in
think
the-
that 3-digit
Back in the
number.
broker world, years and years ago, a lot lower. So I would say probably 550. Now it's 580.
580. What's the lowest amount of money ever you've had where people put down?
They get their earnest money back at closing.
They get a refund check at closing.
Veterans
They
There
make
you go.
at
or
closing.
USDA 100% financing,
So everybody out there is thinking, oh my gosh, I got to put all this savings away and everything like that. They're getting a check back at closing.
Yeah, they got the seller pay their closing costs, 100% financing. And they got their $1,000 earnest money back at closing.
The
You go.
sellers paid your closing costs. So buyers, if you're out there, you think my credit score sucks. I don't have enough money to put down. Here's what you want to do. If you know Michaela, or if you don't know Michaela, you want to get to know her. If you're in her area, you want to get with her. She's going to couple you up with Stephanie, and we're going to formulate a game plan. Not a pre-approval. We're going to get a game plan going for you so we can know not if you can buy, but when you can buy. And you'll have a path to move forward and go with that. And if you're in the Ohio area, Jason and I have been doing this since 1997. We would love to talk to you too and show you all the different tools that we have to compare and contrast whether or not it's the right time for you. For example, if you said, hey, I'm moving in 18 months, we're going to tell you just rent. We're not going to get a commission. We're not going to like put you in a house and then have you set up for success when you're going to be selling in 18 months later. That's not what we're going to do. So I want to really thank Stephanie. I heard great things about you, Stephanie, but now I know why Michaela's been ranting and raving about you so much. You were amazing on this, and I hope we
Thank
can have you
you.
back again sometime here in the future.
I would love that, guys. Thank you so much. This has been so much fun. You guys have a lot of energy, and this was super fun. I hope it helps somebody not be so scared about buying a house. And I am licensed in 7 states, so not just South Carolina. So if you want to know, I can also include which ones. And I know other loan officers and benchmark branches throughout the states. I can help people that I really trust.
The
Perfect.
tools and tips and things we talked about today, we will put in the comments section. We'll put Michaela's Calendly down there so you can jump on her. Just jump on her Calendly. Schedule yourself a little time to get together and talk so that she can formulate a game plan for you. She's an amazing real estate agent in the area. You will love working with her. Everybody from Ohio that's moving to South Carolina, we're sending to Michaela to
She's
to
amazing.
relocate.
That's right. Thank you for all of this today. It's been super fun. Michaela is awesome. Jim, I will be sending you a loan up that way. Most of the people there are moving here, though, I have to say.
Every so often, somebody wants to go back for whatever reason. So we'll help them get back there.
Yes.
I love it.
Well, thank
I
you
love
guys.
it. Great job today, ladies. That was awesome.
Thanks.
All right.
Thanks, guys.